Wow guys, what a crazy day in the market so far. The S&P looking to close out the day on a green note. We only need about 0.39% to actually go green on the S&P 500. The S&P was down over 2% at one point today, looking like we might come back and retest lows of 2022 a lot quicker than we previously expected. But at the same time as all of this somewhat bullish activity, the Nasdaq being up over 1% today, well, the option activity looking down the line for later in July is looking exceptionally bearish. Also, you got some bad news today. Bad news out of Europe. You're seeing some very bad things happening in the currency markets, right, with foreign exchange, and you also see that the 2 and 10-year yield curve is now inverted for the day. Also, growth stocks are popping today, and that is what is mainly helping to drive the Nasdaq up. And why is this happening when there is so much fear about a recession? All of this and much more we will dive into here in this video. So hit that like button and subscribe to the channel. Comment down below if you have questions on any of this information. We will be live tonight to answer all of your questions in between 10 and 11 p.m. Eastern Standard Time. So come join us over there. Thank you guys for tuning in. If you want to come trade with me live in real time, link down below in the description of this video as well. So first things first, I do think there is still more downside to come this week. Just a quick preview on what we have for tomorrow and for economic data. You do have Fed Williams speaking at 9 a.m. 10 a.m. you get ISM non-manufacturing PMI for June and JOLTS job openings for May. These are brand new job openings. If we get bad news on these fronts, it could be seen and probably will be seen as a good thing, because on one hand, yes, you're fearful about a recession, and that's the biggest thing that we're going to talk about here in this video, and markets are obviously fearful about a recession here today, but it would also show that maybe the Fed won't act as aggressively. But the main catalyst for tomorrow will be at 2 p.m., and that will be the FOMC minute, so I don't expect a huge move one direction or the other. Really, I don't expect a huge bullish reaction tomorrow. If this data is good tomorrow, JOLTS job openings, ISM non-manufacturing PMI, it's possible that you do get a bullish reaction, but I don't expect a big one until after 2 p.m. After 2 p.m. and the Fed minutes come out, that's where you are going to see a really violent market reaction, a big up or down move, and then we will likely continue in that direction throughout the remainder of this week. So you do have some big data coming out tomorrow. But what you're actually seeing happening today is that the markets are fearful about a recession. And this started in Europe. European markets were clapped today, down almost 3% across the board. And what this article says is that the French industrial production was flat in May, and PMI numbers throughout the Eurozone all showed slowing activity. And basically the Fed over in Europe, the ECB, they're not going to be able to raise rates to get inflation down because economic data is just looking so bad over there. So that's a big problem for Europe, and that's why a lot of investors are going out and trying to acquire dollars, and that's what we're going to talk about. The euro essentially hit a 20-year low against the dollar. People want dollars because, hey, if Europe is screwed, we might as well go to America, where America can raise rates to fight inflation without going into a very severe recession. At least that is the mindset that is currently playing out over in Europe and is affecting our markets. Now, with all of this fear of a recession, the reason why growth stocks are actually doing well today is because you got to think about it like this. If we expect a recession, well, then we expect deflation. We expect inflation to come down in a big way. And also with a recession, that's very uncertain growth, right? Some companies will do well. Some companies will eventually go bankrupt. You don't know pretty much what is going to happen. But if there's no growth in the actual economy, well, if a FUBO is growing at 100% per year and it's trading at a very cheap value, then hey, it makes a lot of sense to go out and look for growth when you are in a recession. That's why a lot of stocks are up so much as of right now. It's simple Econ 101. Growth stocks actually perform during or outperform during recessions as long as they have growth. You have to have growth. Companies that don't pay dividends, that don't have a lot of growth, those are the companies that would really fall behind during a recession. A lot of these quote-unquote value stocks that analysts have been preaching over the last 6 months. So there you have it right there. That's why some growth stocks, most growth stocks actually, are up today. But why this could get worse is because until you know that a company will survive, will be safe, or at least know where to put your earnings expectations, it's really hard to put a appropriate valuation on stocks. And that's why I think you're going to see a lot of volatility in the markets throughout July, but also likely a big move down towards the end of July. I've said it once and I'll say it again. You have the Fed raising rates right now. It's expected by 75 basis points July 27th. You get Q2 GDP estimates coming out the 28th, so the day after that. And during this whole time period, you will have pretty much bank earnings out the way, and you'll also have large tech stocks that control the market waiting that will be reporting earnings during that same time period. So I think that's when we could expect some bigger moves to the downside. And if we take a look at Ortex, that's actually what the markets look like they are pricing in. If we look at the S&P 500 for this upcoming Friday, the open interest on the call side is about 38.12%. The puts about 61.88%. So there's about a 2-to-1 ratio of puts to calls for this Friday. But if you look out to July 29th, it gets much worse. For all of the contracts that are currently on the July 29th expiration for the S&P 500, 22.87% of those total options are calls, and 77.13% of that total option activity is puts. So it does look like a majority of market participants that are playing in the options market do expect to see a lot of downside towards the end of July. Exactly what I've been trying to express here on this channel over the last week or so now. Also, the short interest on the S&P 500 is estimated to be in the 19 to 20% range. That is a lot higher than what you have seen throughout 2022 so far. So just keep that in mind. There's a lot of shorts that are still on the markets, but there is a lot of margin that is still outstanding. The margin debt has only went down about 15% here in 2022, whereas the NASDAQ is still down close to 30% for 2022. And we have officially had the worst first half of any stock market in over 50 years. Also, over the last couple of trading days or so, the Atlanta Fed Now GDP tracker does have us coming in at a negative 2.1% GDP print. That would completely freak out the markets. But the bigger thing that is freaking out the markets today, and specifically the bond market, is the fact that the 2-year and 10-year treasury spread, this is that infamous yield curve inversion that you have heard all about, did just invert and go negative here today. And it was a pretty big move down. You could see a negative 108.47% move down here today alone. You are down 0.06 basis points. We were only at 0.05 positive basis points. So we've been around this inversion for a while, but you are definitely taking a major inversion here today. And if you guys don't know about the yield curve inversion, it's essentially saying, hey, if investors invested their money for 10 years, you would expect to get more money back, right? Well, when the 2-year bond is paying out more than the 10-year bond, that means you're in for some near-term shit in the markets, and essentially shit could hit the fan pretty damn quickly. So it usually always predicts a recession. So just keep that in mind, guys. Pretty important to pay attention to the yield curve inversion, especially when it happens and over the next couple of weeks. So there is that. Now, on the front of AMC, the reason why I believe AMC is down about 6% today. If we do go ahead and pull up the charts, I do think there is some people that are just going in and out of this stock, but I also think it's one of those chances the market makers have, the hedge funds have, to try to beat down some of the bullish enthusiasm for the day for AMC stock, right? If you let AMC actually be bullish today, if there was not a lot of put orders that went through, if there was not a lot of market maker shorts, well, the stock would probably be up 10% comparatively to some other stocks that I own that are pretty much all up in between 5 and 10%. If we go ahead and take a look at the option activity for today, you can see a lot of very large puts that are coming through. You are seeing some call activity, but a lot of puts as well. So I think that is helping to hold AMC stock back at the very least, and there's not as much actual positive order flow going through. At the same time, like I said, there's a lot of other stocks that are up more, and that is probably driving some attention elsewhere. Now, Ortex does have the estimated short interest of free float for AMC stock at 18.15%. Current dollar value of shares that are sold short of $1.28 billion. Free float out on loan 28.12%. Shares out on loan 145 million. Days to cover at 3.5. Cost to borrow at 16.56%. 100% share utilization. So what I think is actually going on right here, if you guys have not heard why I think the estimated short interest is actually going down, it's not because shorts are covering. Don't be confused by that. The next time we get the exchange reported short interest data, which will likely be here not too long from now, the last settlement date we had was June 15th, and short interest was almost 22%. The reason I think short interest is estimated to be coming down is that, yes, shares are being returned back without actually being lent out in the first place. So what happens when you actually take on a short position? Well, before you short those stocks, you get those shares, and that is called shares out on loan. That is why the shares out on loan will always be higher than the shares that are actually sold short, right? Free flow out on loan for AMC at 28.12%, estimated short interest at 18.15%, right? So 10% of the float theoretically is held, shares out on loan right now that have not actually been returned. This ratio was a lot higher, and you have seen a lot of shares actually get returned, and I do think Ortex is just estimating that some shorts did cover based off of those shares that are being returned. So we'll know for sure with more clarity if the short interest dropped off in a big way coming here in the near term future. But we also do still have a lot of FTDs that do need to be bought back. Last we knew we had over 2.5 million FTDs that had to be bought over the next coming weeks or so, and this is the highest we have been at for FTDs since essentially the rally in June. We have not been over, in between 2 and 5 million FTDs for quite a long period of time. Could be naked shorting, or it could just be failure to delivers because of derivatives, but either way, it is buying pressure that is coming here in the future at some point. Now the cost to borrow rates, cost to borrow max at 24.58%, cost to borrow average at 16.43%, and cost to borrow minimum at 4.72%. So I do think that is still very much in bullish territory. We've seen cost to borrow rates a lot lower, and we're just going to want to see what happens over the next day or two. Obviously, the data coming out tomorrow will be very important. This is the first week of Q3, so you're probably seeing a lot of portfolio rebalancing, and that is probably a big reason why something like the Dow, surprisingly or not, is actually down 0.77% today, and the Nasdaq is up 1.35% today. It's just a matter of Nasdaq has been beaten down a lot more than something like the Dow. So I don't think we're out of the woods, not at all. Do not get that confused, guys. We're still in for newer lows in the markets, and right now the higher the markets go could be a better time than not to maybe initiate some of those put positions here again. And just to lend more credibility to what is being said here in this video, the bond yields have dropped about 0.08% here today on the US 10-year Treasury yields. If investors thought inflation was going to be the main problem, well, bond yields would go up, because why would you take a 3% yield or 2.82% yield when inflation is 5% per year? You would not do that, especially when the Fed is raising rates. But when you expect massive deflation and you expect a recession, well, 10-year Treasury at 3% doesn't sound all too bad. So there is that. Let's dive into a little bit of the option activity, what we're dealing with AMC stock, and then we will go ahead and look at the technicals and wrap up this video. So July 15th is looking like it's going to be an over 500,000 call contract expiration, which we have not seen, I believe, ever with AMC. Maybe we did in June. I don't remember the exact numbers, but I know this is going to be close to a record expiration, and you're looking at about 483, almost 484 4,000 calls that are currently out of the money, almost 10,000 calls that are currently in the money. For this Friday, about 74,000 calls that are out of the money, and about 5,500 calls that are currently in the money. So it's a very large expiration. Now the puts in the money sitting at about 101,000 contracts, puts that are out of the money at 92,000. So I do expect big moves here in the near term future with AMC stock, and I do think it will be bullish due to the FTDs, due to everything that we have talked about. But you know, don't get too one-sided with this, right? AMC is going to have, you know, bad days. It's going to have good days, but I do think in the end, we're probably going to see a bullish reaction rather than a bearish reaction over the next week or two, specifically just on a fundamental basis. You don't want to be short on AMC. You don't want to be short on any travel stocks, especially given where their valuations are, given where the stock prices have went over the last couple of months. Nonetheless, the max pain is sitting at $16 per share by July 15th. By this Friday, sitting at $13 per share. So that would be roughly where we are sitting at right now, give or take about 40 cents would get us back to 13. Now, if we look at this on a technical basis, the RSI at 47.43, so on the little bit getting on the oversold side, the MACD is still bullish, and we did break out under this level of ascending support. Now you could go ahead and restructure the trend lines. I don't like to do that, but it looks like you could still make the trend for, you know, this right here. So in a way, we're still in this, you know, formation, but in a way you've kind of broken out of it because I just moved it down, but it still looks pretty good either way, even if you do move this ascending level of support line down just a little bit. Nonetheless, we wanted to stay above the 50-day moving average. That did not happen. That is at $13.18 per share. Anything can happen by the end of the day. We're cutting time a little bit short here. Trading is almost over, but nonetheless, I do expect a lot of big moves, and it's not going to surprise me to see maybe a 10% move tomorrow. Those things are on the table, and that should be expected. So that is pretty much all for this video. I still think in between $16 and $20 per share is the likely outcome for the end of this week. I do think the markets could see a little bit of downside pressure, could be a mixed week, but I think AMC will outperform on an overall basis. So that is going to be all for this video. Hit that like button and subscribe to the channel if you guys want access to all of my trades in real time. Link down below in the description of this video, and get yourself those free stocks with Webull, Moomoo, and Public. Also link down below in the description of the video. Thank you for watching, and I will see you in the next one.